When you look at some of the concerns, first of all, about demand, economics in Italy due to the trade war, is Italy going to disproportionately suffer compared to other European countries if the trade war continues?
So Italy is an export country, so of course trade is positive for Italy, and global trade is generally a positive thing for exports. Mainly Italy exports into the European Union, so it will not be more impacted than other countries. Only 12% of exports go into China. The Italian GDP has performed above expectations recently, with coming out of recession with little growth. So I think Italy is doing okay, actually.
And do you worry about the trade war actually impacting your consumer demand and therefore your company?
I don't see it impacting demand. I see actually a slight positive for Europe as we enter the summer period, and tariffs on U.S. LNG means more LNG is likely to come into Europe, which means more diversification and probably better prices. LNG goes in the summer where storage is. Europe has a lot of storage. So trade dispute between U.S. and China could mean cheaper energy for Europe.
So I brought in a map for you, which actually we did at exactly the last second, because I know once you showed up with like a physical map. You can do that on the Bloomberg terminal, and this is some of the LNG terminals around the world. How will that map change in the next 15 to 20 years?
So I think you'll see more yellow dots over in China for sure. What's very clear in this map is that all the yellow dots, the regas terminals, are in the northern hemisphere. And people use natural gas for heating, and so when it's winter for everyone at the same time. China does not have a lot of gas storage, and so it's actually putting tariffs on LNG imports at a time where it doesn't consume a lot of LNG, because China mainly uses gas for heating. So when it's winter for everyone, and when it's summer, no one really knows where to put the gas. And so if you have storage, you can actually get some good deals, and that's very positive for Europe.
Marco, talk to us a little bit about the correlation between the price of oil and, of course, what you guys do. Right? The price of oil seems to be pretty stable, and we can't figure out, it seems like there are geopolitics risks, concerns, like the waivers being taken out of Iran. But because there's a natural hedge, because demand may be going down because of global slowdown, it kind of stabilizes.
So when the war broke out in Libya in 2011, we calculated about a $30 premium because of geopolitics in Brent. If you now add to Libya issues, Iran and Venezuela and Hormuz Strait, I think oil is quite low given everything that's going on in the world. Why is it so low? Because inventories are still very long. And if you look carefully at what OPEC is saying, I think they're likely to push in June for an extension of the cuts in production. That means they feel that on the demand side, because inventories are so long, there may be some slowdown.
We looked at one of the things that we were looking at yesterday was the price differential between Brent and WTI. But do you look at that? Do you care about that? Does it give you kind of an idea of what's going on?
Used to. Gas prices used to be linked to oil prices, but no more. Gas prices now are linked really to the weather and to what's happening in China. Because LNG is mainly going into Asia, China decision on demand and tariffs, I think, has a much bigger impact than oil on natural gas.
Do you worry about the strength of the Chinese economy? We're talking with Pau that actually, PPSC is there, they can stimulate anything out of the economy. Should we worry?
We are not worried. We think there's going to be a lot of opportunity for investors like us to look at the Chinese market as a place where really a lot more infrastructure will be necessary. China is finally pushing strong on the energy transition. They're very serious about addressing air quality issues in cities like Beijing. Life of people living in Beijing has been extended by 2.5 years just by reducing coal in cooking and heating. So there's a big transition to cleaner energy, big transition to gas, which is good for people like us building gas infrastructure.
Okay, are you interested? Do you have positions in gas companies?
We don't at the moment. We're looking at it closely. There's too much of a geopolitics. I am concerned specifically when I look at Europe at sort of the political intervention. Obviously, maybe we have a bias here in the UK where we're hearing how Corbyn will be very happy to intervene in some infrastructure around energy, and therefore we're trying to stay away from the space for the moment.
What's the question that you get the most from investors? Is it energy policy in Europe and in Italy, or is it involvement of governments?
It's definitely about climate change and what we will do in a world in 2050, or Europe in 2050, and the UK in 2050 that's hoping to get to zero CO2. How do we address that? And our answer is very straightforward. There's a big role for hydrogen and for green gas in a transition. So we are very bullish on the ability for renewable gas, meaning turning waste into gas via biomethane. and hydrogen, which means turning wind and solar energy into synthetic gas through electrolysis.
But has Italy, and I guess the government so far, have they done enough with the energy policy? Could they do more?
I think Italy has the highest production of renewable energy. And the future of Europe will be a lot of wind power coming from the north, the sea, and a lot of solar energy coming from North Africa. So Italy will be a natural hub because of its geographical location close to North Africa, its physical interconnection to North Africa. So a lot of solar panels in North Africa producing hydrogen and renewable energy that will come into Europe through Italy, and the same would happen in the North Sea coming into the coasts here.